Goons. What is poppin'? Who's all in here? You know what we're doing tonight. We're covering options. It's going to be a wild one. We're going to cover the basics of options, not get too in-depth, just because there's so much to cover. I want to give you guys a quick highlight, leave you off with a little bit of tailwind here, and then we're going to jump into the next learning session next week, baby. Who's all in here? Brandon, Christian, welcome. Tyler, Jimmy, G-Tron, Travis. What up, baby? I think I'm going to jump right into the lesson first, and then we'll tail off the video with the market overview. We're not going to forget the market overview, though. Don't forget that shit. But we're going to start off with the lesson because I know there's going to be a lot of questions. I'm going to try to answer as many as I can. Options are very complicated. I know there's going to be a lot of in-depth questions tonight. You guys just got to bear with me with options, okay? You're not going to learn it all tonight. I'm telling you right now. You're not going to learn it all tonight. I'm not going to be able to cover all your questions, okay? I'm familiar with options. I understand them. I trade them, okay? But this is not my cup of tea, okay? In the future, we're going to be hiring on some options experts to give you guys calls and whatnot. I think I'm suitable enough to do that for now, but I'd like to give you guys a little more of a flavor and taste of the options. So we want to make you guys master traders, and part of that is being well-versed in your strategies and being diverse in your strategies as well. And options is going to be one of those for you. So we're going to dive into it shortly. We're going to give it about 30 seconds, let some people trickle into here. I'm going to play some music, again, about 30 to 60 seconds. Get some people in here. We're going to run it. Let's get it. Let's run it. All right. Again, guys, there's going to be a lot of questions tonight, and I understand that. But let's get to the learning first. Again, you're not going to learn all this tonight. I'm telling you right now. But you're going to learn it damn well, and you're going to make some good fucking money doing it, okay? That's what we're here to help you do. Just having the options. Classes in session. Get the notebooks out. Options basics, part 1. I don't know how many parts we're going to need for this. Probably a lot. But part 1 is where we're starting today. Got the new logo, represent. Let me know what y'all think. I like the pink and purple. I do a lot. I'm feeling the vibe. We do have interchangeable colors as well. But I think this might be the base. I'm going to start off this quote here. Scared money don't make money. Now, I'm not implying that you should just like fucking leapfrog into options. This is not what I'm implying. I just like to throw in a daily quote in here. Get you guys a little motivated. I have to tell myself this a lot. There's a lot of times where I'll see a really good setup, and at least when I first started trading, and I'm aggressive in nature, but when I see a good setup, I wouldn't take the trade. I don't know why. Now I'm not doing that as much now. That's why we're making money. But scared money don't make money. Okay, you gotta understand, guys. When you're placing a trade, you're taking a chance, but your chances are higher the more prepared you are. Okay? And that's anything in life. You have a plan. You have a clear risk mitigation strategy. A very clear cut, clean, robotic trade. You're gonna be fine. The word scared doesn't even need to be used. Okay, but scared money don't make money nonetheless. Okay, but of course you gotta walk before you run, you gotta crawl before you walk. So I'm not implying, hey, I've been trading with, say I'm hypothetically somebody, I've been trading with 50 to 100 bucks a day. Stay what you're doing. Don't change your plan. Okay, don't say, hey, I was on the live stream last night and it told me to scared money don't make money, so I'm gonna start trading heavier. No, that's not what that means. Okay, this is more the implication of, hey, if you see the trade and it's satisfying your criteria and you're confident you have a plan, just fucking take it. You have nothing to lose but the opportunity. So let's get y'all fired up here. Mike, Nismo, Christian, The Fitness Journal, Juan, David, Oscar, Chris, Colossus, Burns, Alex. What's up, baby? Will there be an options bar at the morning watch just for options? Yeah, eventually. Options going to be good to understand in bearish markets. Yes. That is why, me personally, I've been actually more sluggish with my trading, but focus more on high quality setups. Okay, and I'm always focused on high quality setups, but in a market that is indecisive but highly volatile, I want to capitalize on the movement, and this is where options allow you to do that. Options benefit from volatility. This is where they live and breathe. All right, Goons gang, Jose, Sergio, what up? All right, first slide here again, guys. This is all high level. Okay, you're not going to learn options tonight. This is part 1 of our series. It's going to take a while to learn this, okay? But we're going to do it right, and we're going to do it effectively. So high level, what are options, okay? There's a million different definitions. I try to dumb it down because you guys don't need to know all this other little shit, in my opinion, but it doesn't hurt. Knowledge is power. A stock option gives, this is the definition, gives an investor the right, but not the obligation to buy or sell stock at a certain price. Okay, so it gives you the right to get a stock pretty much at a different price than the normal like price that you see on the ticker, right? Typically options are traded in lots of 100 shares. Okay, so that's something to note here. The attractive part about options is, like, let's say I want to trade something like Amazon, right? $3,000 a share. Well, if I'm trading Amazon options, I can probably get 100 shares of Amazon for, like, you know, not even the price of that, right? And we'll walk through an example. I'll show you. And then just understand that there's 2 main types of options contracts. Now, you're going to hear terms such as covered calls, cash secured puts, leaps. Again, we're going to get into all that. Just, this is the high level. Don't overwhelm yourself. I always tell you guys, got to get 1% better every day, not fucking 40% better every day. Okay, we're not gonna learn all this tonight, but we're gonna hit you with the high level bullet points. Talk about some key terminology you guys should probably have on your tool belt when getting into options. Kind of elaborate on some of those, and then we'll just keep carrying on with the topic. But the 2 main types of options contracts are calls and puts. Okay, here's a little visual here, right? Stock option. Call is going up, put is going down. So from a high level, right, calls is like I'm bullish on it, I'm going long. Okay, so if I think the price is going to go up, I'm looking at calls. If I think the price is going to go down, I'm looking at puts. And that's the cool thing about options. If you don't really know how to short trade, you can just use options, right? You can just buy puts. So I buy puts. You know, I don't really short sell or short trade. I'll short trade maybe cryptocurrency just because I'm familiar with it. It's the same concept with stocks, but I'm not familiar with. I just don't do it a lot. Okay, that's all it is. It's not that I'm not capable, I just don't do it. So in that matter, I just buy puts. It's just easier for me. All right, this is where it's gonna get a little bit confused. Like, I wouldn't say confusing. This is just where I'm gonna start chucking info at you. Okay, now with options, some of the key things you need to understand with options. These are the key terms you need to understand. Again, this is a high level live stream. I know you guys are going to ask in-depth questions. Well, what's an example of a good gamma, or what's a good delta price, or what's a good vega? Guys, again, this might not be the live stream for that. I'm going to get you guys what you need to understand this. I just want to hit you with the terminology, high level what it is, and then when we make more options learning sessions, I'm going to give you guys tips and tricks. What's a good delta price to look at? When do I look at it? What's a good vega price, theta, gamma? How do I use them together? I will break all that down for you. This is just not that live stream, okay? High level options, Greeks. You're gonna hear Greek values a lot. This is when you go on the Robinhood or Thinkorswim or whatever, and you pull up an options contract. You're gonna see all these fucking numbers. Okay, they're called the Greeks. There's a bunch of Greeks. I think there's like 6. Okay, I really only look at 3 of them. But here's kind of the 4 main ones. Okay, the one you really need to focus on for sure is the delta. Okay, now you see here in parentheses, right, price. Let me back up first of all. What are the options Greeks? Like I said, they're these values, and they're so important because they measure the changes in the certain factors, right? So there's factors that influence the price, moving on an option. And these are those factors. They're the measurements of that. Okay. There's 4 main ones again: delta, gamma, theta, vega. So we're gonna start with delta, go one at a time, piecemeal this, okay? Delta, again, it's in relation to price. So if you see the parenthesis right by the term, it's in what's it in relation to. So delta is in relation more to the price. They all affect the price, but this is specifically tied to it. This is also known as the premium. So you're gonna hear a lot with options. You're gonna hear the word premium all the time. If you watch a TV show, YouTube video on options, or watch an options trader talk, they always talk about premiums. All that means is the discounted values. It's the discounted cash value. So that's what I was talking, going back to that Amazon example, right? Amazon's $3,000 a share, okay? If I'm buying an options contract on Amazon, I might be able to buy 100 shares of Amazon for like $20 a share, okay? Sounds pretty attractive, right? There's caveats to that, but that's the high level. It's the premium. Your delta is the premium, okay? It shows how much the option will go up in price for every $1 increase in the stock. Okay, so delta, a good delta example is maybe like 40. All right, so you might see this as a delta value here, 40. When you're looking at an options contract, okay, that just means, right? So remember I said that Amazon share, let's say I can buy 100 shares for $20. And my delta's 40. Right, so every $1 that the Amazon share price goes up, so that $3,000, if it goes to $3,001, I make 40 cents. Okay, my option goes up 40 cents. That's quite a bit. Yeah. Again, high level. We'll show examples. Don't get overwhelmed. Just know from a high level, delta is the premium. The delta is your premium. That's all you need to know. Okay, we'll dive into the details. Next one here is gamma. Again, it's in relation to price. This measures the expected rate of change on delta. So gamma's tied to delta. Me personally, again, gamma's not one I focus a whole lot on. It's important to understand it. I don't really focus on it when I'm looking at options. I look at delta, theta, and vega more than anything. But more information, the merrier, right? Knowledge is power. Okay. I'm going to take a 30-second pause here because I'm spitting out a lot of information. I know you guys have questions, so I'm going to run through them as well as I can. So spit them in here. I'm going to give you a 30-second pause here, a little timeout. If you have any questions so far on any of these 3-4 slides we've covered, okay, what are options, and then like these first 2 Greek terms, answer or ask them now. I'm going to jump to questions, and then we'll dive back in to the learning session, okay? So I'm gonna give you a little breather here. Let me know. I'm watching, baby. All right, no questions. Cool. We'll keep chugging then. I just want to make sure, right, I'm engaging, I'm relaying the information appropriately. You know, me personally, I talk a little bit fast, and I know this is a lot of new information. We're getting a lot of people in here. This is new. Okay? And again, we're covering the high level. I told you not to get overwhelmed. You're not going to learn all this tonight, but I will help guide you on a path that's going to help you learn it faster and more effectively. Okay, so a more efficient pathway. When buying an option, does the delta get locked in at the exact moment of volatility? Yes, I believe so. I think the delta stays fixed, but the price will still move. Okay, so I think the delta is fixed, but you have underlying Greek values that will still influence the price of that contract. Okay, but yes, it's a good question. I feel like an idiot not having understood the first part of the presentation. The first part, right here, This one, yeah, that's fine. So again, don't get too caught up. The way I look at options here, okay? Here's the way I look at it. Okay, you can get more bang for your buck. It's called leverage. Okay, if I can buy 100 shares of fucking Amazon for $500 instead of what would be 100 shares of Amazon normally, right? $300,000, right? I think that's a little bit more attractive. Now it doesn't mean like if I sell it immediately, I make fucking, you know, whatever the math is on that $299,500. That's not what that means. It gives you the ability to control more of an underlying stock, okay, of a security, and that's your leverage right there. You're trading 100 shares of something, and you're getting it at a discounted rate, okay, and just from a high level, right? You can decide to bet on that price going up on the stock, or you can bet on it going down, and that's your calls versus puts, okay. That's all it is. Sorry, I left the music up. Thanks, Christian. Yeah, Mike, just rewatch it. Don't get overwhelmed, okay? Just, yeah, again, guys, one day at a time, okay? I'll do as many fucking learning sessions as we need. We'll get it down, okay? This took me a while to learn. I spent a lot of weekends, all right, trying to learn this shit. Yeah, and Burns is right here. Take notes, reread the notes until you get it. You gotta fucking grind it in. But again, I'm gonna consolidate the information for you, make it as simple as possible to learn, so we can just dial in, okay? We'll craft it. Okay? Rome wasn't built overnight. You don't build a wall overnight. You lay one brick at a time. You lay the foundation. I'm gonna go back to options, Greek. We're gonna keep rolling here, okay? So this is a big one here. We took a good time to pause, all right? Theta. Drive that home. Theta. Look at the fucking theta. Look at the theta when you buy an option. Theta. Now, I have the parentheses here, time. Theta is in relation to time. Now, going back to the definition of options, okay? When you buy an option, it's a contract. You're buying a contract. You're buying 100 shares of something. It's a contract, okay? That contract needs to get exercised at one point in time. It expires, okay? It has an expiration date on it. So that's why when you look into options, you'll see a lot of dates on there. It's because stuff expires. So that's the tricky part with options, right? They decay. Okay, and that's going into my point here with theta. Theta is your measurement of that decay, of that severity or speed of that decay, right? So it's called time decay. That's what theta is. It's your decay. It shows how much the value of the option goes down each day leading up to expiration. Okay, and again, we're gonna pull up examples. I'm gonna talk through all these slides, tying it to the examples, and then it'll all make sense. Okay, and then the last one here is Vega. Another word for it is implied volatility. Implied volatility is huge. You'll see this in percents as low as 10% and its percents as high as like 400%. Okay. Implied volatility is good. It's good. Okay. And that's why this is a good market to be trading in. But it shows how much the delta may change for every 1% change. So every 1% change in implied volatility. So let's say my implied volatility is 100% and goes 101%. Whatever value that is, it will show how much the delta changed. Again, just fuck the definition. All right, look at these 4 highlights right here. Delta means your premium. That's how much the option costs. Okay, that's the price you're getting it at. Gamma just tells me how much my delta is expected to move. Theta is how much my option is decaying. So that price goes down. So if I hold an option, it decays each day. Okay, so you might see a theta value. All right, let me see if I can draw on here. Fuck. It's gonna be hard with the mouse. So if I have a theta of like 0.4, yeah, this is going terrible. And I bought an option for 0.6. So the delta on the option is 0.6, and the theta, whatever the fuck the theta symbol is, I'm just gonna put a fucking circle here, equals 0.4. Okay. That means every day I hold this contract here, it's decaying by 40 cents. This thing's halfway dead if I hold it just for one day. Now, it's never going to be that close in value, okay? But your theta is just saying, hey, for every, like, basically, like, for 40 cents a day is what's going to cost me to hold this option. I might have got this option for 60 cents. It's going to cost me 40 cents a day to hold it, right? So I probably don't want to hold it more than 2 days, or otherwise it's worth nothing, okay? again, we'll tie this all back home. Don't worry about it. It's a lot of shit, but you guys asked for it, and I think it's worth teaching, and I think it's very opportunistic. We're going to get this shit down. Delta, Gamma, Theta, Vega. All right. Let's take a look at the questions here. Hell yeah. And yeah, if you guys are knowledgeable about options, spit some game in the chat, spit some game in the Discord, okay? We have the experience, but it doesn't mean we're the best at everything. It doesn't mean we're the necessary experts. I mean, we are, but it doesn't mean like, you know, there's guys out there that might know a lot less about stocks, but they know more about options than I do, you know, and that's fine. So help each other out. You spent 4 months reading books every night before you felt comfortable trading options. Yeah, they're kind of confusing. You know, the way I'm glad you made that point. The way I want you to think about options is a lot of people get it twisted where they trade options like a fucking stock. Okay, so they're like, oh, I'm kind of getting the stock thing, you know, I buy here, sell here, I get this. Oh, why don't I just do this with options then instead? It's different because options have these Greek values, right? Stocks don't have these Greek values. Stocks are going to be the price that you see on the exchange. It's going to be that big price you see, right? If AMC's $24, it's $24. All right, no ands or buts. If I have an option though, it's gonna be a lot different. It's gonna move around. It's gonna move on its own. It's gonna decay each day. Okay, so options have a little more value tied to it versus a stock. It's just the straight up price of that stock, the value in itself. Okay, so you can't trade options the same as stocks, as nice as that sounds, right? Because again, a lot of people, this is where people get fucked up. They're like, I'm really good at trading stocks. You know, I'm good at buying here, selling here, buy off that support, sell off that resistance. I'm killing it. I've been doing it. I might as well just do it with options now. It's the right thought process, but you got to culminate that with, okay, you know, it sounds like you got your technicals down, so you're getting when to buy and sell, but you got to culminate that now with your Greeks, okay, and just understanding of options. So it's a two-piece situation there. For theta, is it gradual decay or does it decay whatever the theta is only every 24 hours? So the theta is typically gradual, but it's not really. It just depends. So I've seen thetas that decay like a motherfucker. Okay, thetas can be pretty damn high. It really depends on some other values and factors. A lot of it too is based on how far out your expiration date is, right? If I have a stock that's going to expire today, like the same day that I bought it, or sorry, an option. If I have an option that's going to expire the same day that I bought it, same day expiration, it's going to decay like a motherfucker. If I have an option that I bought, because you can buy options as far as like 2 years. Okay, so I bought an option for 2024. I bought a call option on something because I really like this company. I think they're going to go up way in the future. That's likely not going to have as high of a theta. It's going to be extremely low, very likely. Okay. But theta has it fluctuates. It can be high as shit and it can be low as shit. See, that's why you need to understand the Greeks, okay? Are options more for long-term plays or do you play options intraday? I scalp options. I will play options. I swing trade options, but I'm not swing trading right now in this market. In a normal market, and when we were in a bull market, I was swing trading options. So I buy an options contract that's about a month out. Or I've even done it as far as 3 months out because it's more conservative. It gives me leverage if I'm really bullish on a stock. Okay, but the flip side of that is you give the market a lot of time to make up its mind. So maybe about an option on an EV company, it's 3 months out from now and everything looks good. The company's been uptrending for 6 months straight. Well, in those next 3 months, anything could happen, right? Stock market can crash. The stock market might change its mind and not give a shit about EVs anymore. So then the EV market crashes, but then all the other stocks are pushing up. So there's a caveat with that. But I usually play options same day right now. Does theta compound over time? It doesn't compound, no. Is it fixed? I believe so. I will double check. A negative and a regular theta. I'm not too sure. I think they're both bad. They both get rid of your. They both are a measurement of time decay. I can look it up. I don't think there's such thing. I think theta is just, it's just how much it will decline, basically. So it's typically expressed as a negative value. Okay. I want to talk about some key terms real quick. Okay. Some key terms that we covered today, or we're going to be covering. All right. Are these right here. I want you guys to understand these, write them down. There's more key terms, but this is where we're starting for today, so you don't get overwhelmed if you haven't already. Okay. Expiration. All right. We talked about expiration. Let's see if I can get rid of this shit here. We talked about expiration, okay? Expiration is what comes with an options contract. Options contracts don't last forever. It's a contract. It has to be what's called exercised at one point. That means you're basically like, you're getting rid of those shares, or in some cases you're taking them, okay? But not to confuse you, it's when your options contract expires, okay? So you're gonna hear this term. The next one is strike price. Strike price is what you're going for. Just think about it, right? The strike price is your target. That's your price target. Another word for price target. So when you go and look at an options chain, you see a bunch of options in there, you want to trade, you're always going to see a strike price in it. That means that's the price I'm betting on it hitting. Okay. You're going to hear the term underlying. Underlying is just another word for stock. Okay. You're going to hear the options Greek terms, right? Delta, gamma, theta, vega. We talked about calls, right? That's going long on a stock. So you're bullish on it. You think it's going to go up, right? And then you're going to have puts, opposite. And here's some new ones you might have heard thrown around. Okay. So when you're looking at options, there's kind of a way to look at them here. Okay. There's these three terms here: in the money, at the money, out of the money. Okay, so you're gonna hear people say those terms a lot. That's why I put this visual over here for you. So here's an example of out the money, in the money, at the money. So at the money means I'm buying an option that's at the money, that's at the price of the stock. So that means crude oil is currently trading at $95. That's about right? 95 is over here. Come over here, 95 bucks. I'm buying a contract at the money. I'm betting on it hitting $95. Okay, sounds crazy, right? But just stick with me. You also have in the money. All right. And you also have out of the money. So in the money typically means like you're betting on a price. This shit actually looks opposite, matter of fact. But you're basically, when you're in the money on something, you're basically like, you have your price, right? So let's say I have AMC. Let's say AMC is 24 bucks, right? So let's say I have a strike price. I'm looking at an options chain right now. So I have a strike price of $26. Maybe I even have a strike price that's less than $24. Maybe I have a strike price of $23. So when you're looking at an options chain, you're going to see a bunch of these strike prices like listed like, top to bottom like this, 23, 24, 26. Well, if AMC is currently trading at 24, if I buy an option here, that's an at the money option. Okay. If I bet on AMC hitting $26, that's out of the money. If I bet on it hitting $23 in a week, even though it's at 24 right now, and I'm betting on it hitting 23, that's in the money. Okay. Rewatch the stream. Let me get to the questions. All right, and then here's some tips. We'll walk through those in a bit here. You definitely want to close your contract before they expire. Yeah, and the big reason is because of the theta decay. So even if the stock looks bullish, it has a bullish outlook in the future, the longer you hold it, the more it decays. Okay. Would it pretty much be a bet that it's going to go down? Yeah, you're shorting it, right? It's going to go down. Can you sell anytime before expiration if you buy months or years? Yes, you can. You can sell whenever you want. You can sell 2 seconds after you bought it. Okay. It's a good question. Would you would a put pretty much be a bet that it's going to go down? It's like gambling. Okay, so it's not like gambling. If it's like gambling, that means you didn't have a plan. You don't know what you're doing. So nothing should ever be gambling in the stock market. Know what the fuck you're doing. If you don't know what you're doing, then why the fuck are you wasting your money? Don't throw your money at options if you don't know how to trade options. Oh, but I want to try it. I kind of want to see how it works. No, you don't. Okay, unless you want to blow your fucking account. I'm telling you from experience. It's not gambling if you know what the fuck you're doing. That's why there's people that are consistently making money every day. If it's gambling, how are they doing that? Right? The probability is the same. It's not like gambling, no. The way I look at it is if I can make money in both directions, how the fuck is that not beautiful? You don't always have to buy things that are going up. You can make money shorting. Is in the money call a put? Is in the money? No, it's not. That's a good question. That's a good question. You're gonna fuck people up with that question. that's too good of a question. No, it's not. That's a good thought though. Your head's in the right spot. It's not. They're weighted differently because you're still bullish on the stock. If, like I said, AMC. If AMC's trading at $24 right now, and I'm saying, hey, AMC currently is $24. I'm buying a call option that expires in a week. I'm betting AMC is going to at least hold $23 or more. All right, so it's kind of a way to look at it. If you're shorting it, it's going to treat you differently. So it probably benefit you more actually if you're betting on it going down to 23 from 24 in a week from now versus staying at 23 in a week from now. Okay. Again, that's just going to come with experience. You'll likely never want to exercise an option. Not immediately, no. You want to do it when it's right, and that's something you'll figure out when you dial into your plan. What are your biggest profits for out of the money calls? Or are there bigger profits for out of the money calls? Yes, very good question. So, right, you get rewarded, guys, for your risk. All right, so I want to tie it all back to these, right? In the money, at the money, out of the money. So if I'm betting on something going up, that means I'm playing it out of the money. If I bet AMC is going to hit $30 next week and it's at 24 right now, you best believe I'm going to get rewarded like a motherfucker for that. Because not only you're going to get rewarded just from the stock in itself going up in price, you're going to get rewarded for all the underlying Greek values that you have. So when you bet on something, when you bet on a higher price that's out of the money, your premiums are usually insane. Like you usually have really good premiums. You get the hookup. Okay. That's your reward for that. But if you're more conservative like me, I buy a lot of in the money calls. That's actually my preference. I like to trade in the money. I'm more conservative. I do a few out of the money back when we were in a bull market and I was swing trading more. Because out of the money will fucking pay. But in the money to me is more conservative. I'm basically buying a stock at its current price and I'm saying it's going to hold this or go higher. But the thing is, right, there's less risk. So there's less reward. So if you're more conservative, you won't get rewarded as well, but you still get rewarded handsomely. If you're more aggressive, you get rewarded insanely. And at the money is just kind of splitting hairs. All right. There's more volatility on them, but if you're too out the money, you can see your call losing value, even if the underlying asset is moving up. Yeah, basically. Yep. That's why you got to really watch your theta values and other Greek values. I'm just watching hours of videos. Nasser. Oh yeah, you guys gotta, yeah, definitely gotta watch some videos. It might be a random question, but are cover calls not options calls? They're different. It's hard to explain. It's back ass words. Okay, I'm gonna leave it at that. Cover calls are not the same as option calls. They're entirely different. They're related, but they're way different. Okay. Cover calls, like I believe you have to own, like I believe with a cover call, you already own like 100 shares up front, and then your call is covering those 100 shares from being retained at that expiration date that you have on your contract, right? So it's, again, we're not gonna get into that term. That term is not on the list tonight. That's a good question. All right. I think cover calls when you're buying and selling calls. No, it's much better to buy in the money options because if you buy out of the money, you better hope the volatility is high. to get you in the money. Yeah, volatility is big. You really want to watch volatility. All these, right? Especially, again, volatility, theta, and delta. Gamma, sure, doesn't hurt. But these are my preferences. And volatility is your friend with options. That's why I like options right now, because the volatility is high in the markets. Why is it high? Because the markets are uncertain. You have a lot of money moving back and forth. There's sector rotations going on. There's a lot of shit going on in the markets right now. So that's a good thing. A lot of people are not liking it, but the people who aren't liking it don't understand it. Okay. You know, I see a lot of people griping, man, January sucks and this year sucks. It's been shitty so far. The market's just been down and shit. Nah, the market's been fucking popping. You just don't know it. Okay. There's been a lot of volume, a lot of volatility. That's how you capitalize on that shit. So we're gonna make money even if the market crashes, okay? And I'm preparing you for that. So let's fucking eat. Tips. Final points here. We'll run through examples. Options are extremely risky. All right. Now, I'm not gonna lie to you. They're so risky that I was almost hesitant to show you guys this shit. That's how risky they are, guys. Because, you know, I see guys in here, you know, trading stocks and stuff, and they might struggle a little bit with that. But if you're struggling with stocks, don't even play options. I'm telling you guys. Of course, it sounds good to make a lot of money fast, but you know, with greater reward, there's greater risk, and this risk is extreme. This is how people fucking blow their accounts. It's options more than anything. It's not stock trading. It's fucking options. Options will fuck you up. I'm telling you, this is not a game. Okay, so don't think, oh, I'm gonna buy SPY puts tomorrow. No, you're gonna get fucked up. All right, use an options calculator. Use an options calculator when creating a plan. That's just a tip. I do it every time. Every time I'm looking at an option, I use a calculator. Now, the thing is, options are so dynamic, degree values change, fluctuate. That's fine, but it gives me a general idea. Okay, it says, hey, if I buy this option hypothetically at this price, what about, like, it'll give you like a heat map on these calculators. It'll give you a heat map. It'll show you like red and green and like, hey, you know, this is how far out your option can last until it expires. This is how much you're projected to make on this date if it's at that price. Okay, so it's pretty nice. And options are good for trading bigger companies. I'm gonna keep it simple as that. Okay, so the thing with big companies, they have a lot of volume, and they have a lot of options volume, and those are two separate things. Okay, we're gonna get into that next video. But there's volume with options you got to pay attention to. Okay, and there's open interest is what it's called. The bigger companies, they typically sustain that volume. It's a big ass company. Apple's always gonna have high options activity. It's always gonna have high, you know, relative volume. It always will. Okay, it's just that big. The thing that makes it good is that these bigger companies, they have so much liquidity and their float is tremendous, that like they don't move that much, right? Apple's not gonna move fucking 40% a day. It's not a penny stock. Apple's gonna move like on a good day like 3%. But if I'm fucking slapping options, I make 70% on that move. I can make 70% on a 3% move with Apple. Okay, so that's where the bigger companies comes in, and it's nice for that because this is again diversifying your trading strategies, right? You don't have to limit yourself to penny stocks. What if the penny stocks turn off? What if the sector rotates? What if penny stocks aren't the flavor of the month right now in the markets? Maybe the flavor of the month is more of these big companies. That's where options are going to come into play. All right. How do you read Vega? We'll get there. Exercising is not cost effective. It's better to sell the contract. If you exercise options, you give extrinsic value. Options premiums are split into two. Yeah, we're not there, but yes, thank you for sharing that. Yes. Yeah, so yeah, extrinsic and intrinsic value. We'll get into that. They're topics I wanted to cover tonight, but it's just gonna get too confusing. I mean, this is already probably a lot for a lot of people. But the intrinsic values, it's basically like the number. It's hard to explain like that. So the way I look at extrinsic value basically is like intrinsic value is like It's more of like how much is going to change outside of like the heart of the value of it. So, and a lot of that's based on like implied volatility. So if your implied volatility goes up, right, typically your intrinsic value goes up, and then the opposite. Like another thing that can hurt extrinsic value is when time passes. So as time passes, that's essentially your theta decay. It's technically called convergence, and that's what's really affecting your intrinsic value as well. So again, it's a lot of terminology. You just gotta just digest what you can. All right, let's go to examples. Let's wrap it up. Hopefully your brains are melted. That's the goal. Let's run it. All right. So, SPY. All right, let's do SPY options. These are the options I've been trading pretty often. All right, so here's SPY, right? So here's SPY, it's doing its thing. So let's say I'm bearish on SPY, which I personally am a little bit. Let's say I'm bearish on SPY tomorrow. All right. I'm going to draw on my support and resistance lines. It's all hypothetical. All right. SPY is cruising at about 452. I'm bearish on SPY. I think it can go as low as, let's say 447 tomorrow. That's not tomorrow, but in the next, say in the next week. All right, so 447. Right now it's at 452, 447. So let's go to trade here, okay? So you're gonna see all this shit. Click options chain. And these are your options, okay? You can see how there's dates on here. All right, that's your expiration date. All right, so we click that. Now, play with your filters on here. All right, there should be a little gear icon, I believe. No, it's right here, layout. Customize, okay? Change your values on here as you see fit. Now, to me, I talked about how I like implied volatility, theta, delta, volume's important. We'll talk about that next time with open interest. And then you have your last bid and ask here. Here's the price of the option. Okay, just to give you guys an idea of how this works. Okay, SPY's trading at $457 a share right now. All right, look how cheap it is right here. 10 bucks, 950, 1050. All right, that's options for you. All right, this is pretty cheap. I like it. So, and just a high, this is high level. All right, so I said 447. I'm bearish. Now, when you look at options, there's two halves to the spectrum here. You have your left half here. This is all your information for calls. And this is on Thinkorswim. It's a lot easier to read this on Robinhood. This is just like a lot of fucking data. It looks confusing. Just don't overwhelm it. Left half of this shit is, if you're going long on the stock, you think it's going to go up, get your calls. The left half is what you're going to pay attention to. This is the information you want to look at. And the opposite is puts. This is if I'm going to go short. All right. Stock's currently sitting at 452, and you can see how the colors kind of split here. That goes from purple to black or black to purple. It kind of gives you a visual like, hey, this is where the stock's at right now. It's at the money at 452. All right. Well, I want to short this motherfucker. It's let's say 447. Clean this up a little bit. So here's the way I want to think about it, right? So I want to give this, like, let's say I want this to breathe for a little week, for like a week or so. So by the end of next week, that's February 11th. So let's look at February 11th calls, or puts actually. I want to go bearish on this. I think it's going to hit $447 between today and the end of next week, SPY. Okay. So let me focus in on this right half here on puts. And you can see right here in the middle is my strike price and my expiration, right? Strike and expiration. 447 is my strike. That's what I'm going for. gonna come over here, look at my values. Okay. Bid ask, right? $3, right? Instead of 400. 19% implied volatility. Kind of low. And then you look at your theta, your delta, your volume. It's all here. Okay. This is a high level. We're not going to dive into what's a good value to look at, all that. I just want you to kind of apply what we've been talking about. Again, I come to the chart. I'm on SPY. And it don't matter what fucking company. You come to the chart. And not all companies have options, so be wary. And I say, I think SPY is going to come down. I think it's going to come down to 447 by the end of next week. That's all you got to say, just high level. I think it's going to come to 447 by the end of next week. That gives you a lot of time. Not always a good thing, but it gives you a lot of time. You come over to the trade, you look at the options. Next week lands me on the 11th of February. That's Friday next week. I look dead center here, right? I already know the expiration date. It's kind of redundant. They're all going to be February 11th. And then my strike price is what I'm looking for, right? You know, you can see it descends here from 446 to 459. But I want to go short on it. So I'm looking at 447. If I got a 447 call, right, that's an in the money call. The price is currently at 452. But I'm in the money, 447. If I'm out of the money, then let's say I bet on it going higher. Maybe 459 hits next week. All right. It's different for puts, though. Puts are going to be opposite, right? For a put, I'm at the money at 452. I'm out of the money at 447. All right. I'm betting it's going to go down. It's opposite. So anyways, hopefully this was helpful. It's a quick visual, guys. Again, we're not supposed to learn this overnight. It's fucking part one. Okay. There's a lot to learn about this. We're going to show you examples. We're going to be trading them. Okay. Yeah. And you're not supposed to get this overnight. I'm giving you a preview. You out of your fucking mind. If you or if myself or yourself thinks we're going to get you down on this overnight. The goal of the stream isn't to like teach you options and then you fucking go bang them out tomorrow. Okay. That's even the goal with stocks. Imagine options. They're a lot more complicated. The goal tonight is to give you a preview, a dabble, right? You should know from a high level how complicated this shit gets, and it can be. Okay? I showed you guys all the terms, all the shit. Yeah, it's not that straightforward. It shouldn't be. It shouldn't be that straightforward. It shouldn't be easy to make this kind of money. Options is disgusting money, guys. It's disgusting. Okay? You think making 80 to 70% on a penny stock was crazy? Bro, you can do that every fucking day with options. You don't even have to have a stock that's hot. Motherfuckers got to go up 2%. And you can make fucking 80% on that shit, all right? I'm telling you, this is worth getting down. This is worth understanding. Okay? What better service to have to hit the ground running with options? What better service do you have to do this, right? You got us here 24/7. You got teachers, coaches. You got people in your trading options themselves. Okay? What better way? Because I tell you, if you go do the YouTube thing, go watch 100 hours of YouTube videos, all that shit, it won't matter. It's not enough. You need people who have been there, seen it, done it, can walk the dog with you. Okay, so don't think you got to know all this shit tonight, all the PowerPoints, all that. I want you guys. It's a preview. I want you guys to digest it, look at it, say, okay, just familiarize yourself with the terms. Don't fucking go in there and try to master every one. Get 1% better every day. Focus on a goal maybe of next week or this weekend to study on Greek values of options, right? That could take a whole weekend in itself. So set a goal of just focusing on the Greeks, right? And then next week, focus more on, how just focus more on the concepts of options, right? One day at a time. That's it, man. I expect nothing less than for you guys to be a little bit confused, and that's good. That means confusion's good. That means your mind's challenging something, right? It's challenging this concept. It's trying to digest it. It's a good thing. It's healthy. Don't expect to get it all tonight. I don't even care if you're airheaded right now. I don't even care if you didn't understand a single fucking thing tonight. At the very least, I know you got a taste and you got a preview, and that's important. It's important to me. It's important to this community, and we're just going to go one day at a time, and we're going to be listening to you guys as well, okay? So with that, I'm going to do a quick market analysis. We're going to wrap it up. We got to go really quick here, okay? So I'm gonna start with the SPY. Probably just do the SPY. That's all I want to do real quick. We're already on it. Let me see if I can refresh it here. What the fuck? Get rid of these lines here. All right, SPY, non-stop channel. It's in a bubble. We were in a bull market. Are we still in a bull market? Maybe, maybe not. Okay. As we look at SPY, the S&P 500, it's breaking out of this channel we've been holding for 2 years. 2 years straight. If we're breaking out of it, not a good thing. I've been saying on every live stream how we need to be very careful as we approach this new resistance level, perhaps, okay? Old supports tend to become a new resistance. Well, we broke out of that support last time. Now it's like going to become a new resistance. SPY right now is getting a little hot. It's been running for 3 days straight, 3 trading days straight. It's getting near that resistance. Okay, that's a key, very significant level. So it's getting near that range. It's in an oversold territory. It's approaching it on the RSI. There's just a lot of confluence here suggesting that the SPY is going to reject here. Now, it's very possible that the SPY simply re-enters this big channel we've been holding for 2 years, right? Gets back up into this bad boy and keeps riding this shit up, okay? But the likely scenario is that that's probably not going to happen, okay? But you never know. But since the odds are against us, right? Well, shit. Guess what your boy's looking at? SPY puts. Okay, or shorting SPY. I think SPY's gonna come down. I think it's collapsing. I think it's just been hot for the last couple days. It needs to cool down, profit taking, whatever. So I'm gonna go short on SPY, but be careful. And the reason why I'm saying this is too, that SPY is getting a little cooked is because this will impact the rest of your stocks. Okay, this will impact your trades. This will impact your swing trades, all that shit. AMC, whatever the fuck you're in. If SPY is going down, you best believe your trades are likely going to be going down as well. Okay, so this is important to note. We need to be looking at SPY all the time and keeping in mind. All right, and with that, guys, I think we're gonna wrap it up. Let me check these comments here, and then we're gonna end the stream. Yeah, good point, Burns. Yeah, Burns is gonna touch options for a while, and that's smart. You can touch them as fast as you want to. You know, if you guys apply yourself and you learn fast, you can slap on options as fast as you want to. It's all what you make it. But conservatively, if you can't even fucking trade, if you guys are losing on just trading a stock straight up, why the fuck are you going to trade an option? Why the fuck are you going to give yourself more buying power, more leverage to what, lose more money? Because you're not going to make more money. Because you're not making more money just trading this shit straight up. So why the fuck do you think options are going to help you, right? And the reason why I'm tough on you, and I'm saying it like this, is because I'm trying to look out for you. I'm trying to save your ass. Because I thought the same fucking thing. I said the same shit. I was trading stocks for a while. I always heard about options. Never got into it. And then when I started to get into it, I'm like, why the fuck why don't I just trade options? They go up. I can make 40% a day. This is crazy. Yeah, exactly. Everybody's saying the same thing, and everybody's getting fucked up at the same time. So be careful, all right? George is excited. Or Jorge. I don't know how to say your name. I apologize. Facts. Fitness Journal. What up, baby? We in this together, brother. Christoph looking. Nismo. Staying cash heavy. I love it. Super late, but we watch the stream. Goons. Love it. Pork chop. Welcome, brother. Or sister. Johnny. Options are good to grow a small account fast, but you better know what you're doing or you'll burn all your money. Yes, you will blow your account. Absolutely. Know what the fuck you're doing. You don't have to trade options. Sit and wait. Guys, I spent a whole year just staring at the fucking charts before I even made a trade. Okay? Just to give you an idea. Alright? Be patient in this game and it will reward you. Okay? You guys are too focused on the reward from the stock market. You need to focus on the process and the reward will follow, and it always will. Alright? So with that, guys, I'm going to end the stream. If you have any more questions or whatever, holler in Discord. Help each other out as well. Okay? I don't have to answer them all. And those who are active and are answering in our community, will get acknowledged as well, and possibly get some benefits through the Discord channel as well. So I'll see you guys tomorrow. Have a good night, get some sleep. Let's eat tomorrow, baby. Let's get it.